Alright guys, so now you guys can see my screen. You can see everything properly, right? So I'll be muting your mics. If you have any question, you want to say anything, you just type it on the community. So let me quickly do that. Alright. So let's head straight to the chart. Tonight we are still talking on market structure. That's our topic for advanced class. Every Monday we do basic class for just what is forex, the basic forex. Then every Thursday we do market structure and advanced things. Now guys, hope you guys can see my screen. Just use the community guys. Can you see my chart on the screen? Can you guys see my chart? If you can see my chart, just type yes on the screen. Just type yes on the screen. We are using, just type yes on the group. We are using, okay. Oh, if you can't hear me properly, then it's the network actually. Can you hear me now? Can you hear me? Okay. Are you the only one who can hear me? Why the rest people not saying anything? Guys, what's up? You fine? Okay, okay. So let's start. Now last class I believe we talked about market structure and we're able to understand that there are three main types of market structure: uptrend, downtrend, and ranging market, right? Uptrend, downtrend, and ranging market. And we said the uptrend is consists of higher highs and higher lows. We say the uptrend is consists of higher highs and higher lows, like what we have here. So we talked about the market structure. So I told you guys a market structure is a place where the market took a reversal from either to the up or to the down. Like this point, that's where you have all these dots coming up. They are all the market structure right now. So everywhere you have this your circle on this drawing, they are the market structure. They are the places where the market took reversal from. Like you have the market leaving here to this point and it had a retracement down to this point. Then created another break of structure. The reason why it's called a break of structure is because this particular market structure was broken. You understand? It was broken to the upside, so it's called a break of structure. The same thing happens here. The market will retrace. Now, if you notice something, the market retracing to this point, it failed to break below this point. That's to say, the market failed to do something like this. You can see it has broken below right now. Yeah, but what happened? The market couldn't break below, and what happened? It broke above again, creating another break of structure. Oh, there was a mistake here. That's not a break of structure. That's, so that's it. Then what happened? It broke above again and did the same retracement, failing to break below this other region. If you can hear me, just say yes. Failing to break below this market structure. Okay. Failing to break below this market structure, then went upward again, broke this market structure, creating a break of structure again. Then what happened? Boom, to the down. The market came down, and this time it broke below this previous market structure that we have here. So let me explain it for you guys now. In market structure, there's something we call weak highs and weak lows. Weak highs and weak lows. Now, we also have strong highs and strong lows. We have weak highs, we have weak lows, we have strong highs, we have strong lows. A weak high, you see weak highs mostly when the market is trending downwards. That is in downtrend, like this place we have here. This is a downtrend because we have our breakout structure to the downside. So what is a weak high? This particular high is a weak high. Why is it a weak high? It failed to break above this one. So it's called a failure swing. Can you guys hear me? It's called a failure swing. So a failure swing occurs when the price, or rather the market, fails to break either above or below the previous high or the previous low. Can you guys hear me? If you can hear me, just type yes. Okay. Are you the only one? Are you the only one in this group? Why are the rest people not saying anything? Anyway, let's continue. So let's continue. All right. Now this particular swing high, this is called a failure swing because it failed to break above this high. So it's known as a weak high. Weak high. And this is a strong low because it broke below this previous low. So the same thing here, this is a weak low and this is the weak high because this low failed to break below this previous low, and this high broke above this previous high. So it's called a weak low and a strong high. And this is a strong low and a weak high. So strong lows and weak highs occur when you have a downtrend. Weak lows and strong highs occurs when you have an uptrend. When the market is going upward, it tends to break structures to the upside, making it a strong high. You understand now? Alright. So that's it. It's very important you know this because you will need it in the future. Now if you can see, we have two different type of market structure here. That's what I want to basically explain today. These two different types of market structure. It's what I want to basically explain today. I believe in our last section, I told us that there's something we call internal market structure, and there's another thing we call external market structure. What's an internal market structure? An internal market structure happens inside the main external market structure, like what we have here, like what we have below. This is the external market structure. Now I tell you the truth, you will never see price moving like this for long. You never see the chart moving like this for long. This is too neat. The chart can never do this for long. Note, I didn't say the chart can do it, but I'm saying the chart can never do this for long. Like you can't sit just like this for 1 week. God forbid. That's never happened since I started trading, though. I don't know if it has happened in the past. So now you majorly see charts like this most times. Not just exactly as I draw it, but get the concept. You see internal market structures inside an external market structure. So we'll talk about external market structure and why it is important, and we'll also talk about internal market structure, why it is important tonight. So let's go. This is external market structure. An external market structure is actually the main market structure of the market. That's how the market really is moving. You understand? So what we have here is the market was trending to the upside from here, trended to the upside. It got to this point, it broke structure to the downside, and what happened? Began trading down. So this is the external market structure. This is the external view of market structure. But the price will not do this every time. Most times we see the price reacting like this. Most times we see the market reacting like this, creating internal movement in the major market structure. Now, what's an internal market structure? Let's see this chart here, this particular chart up here. Let's see if we can use it for something. You see this trade, I took it yesterday. I missed this one and I took this one, and now I'm waiting for the external move, the main move. Okay, so let's see something. Now this is the 15 minutes time frame. I know we haven't talked about top-down analysis, we haven't talked about time frames yet, but I think we'll get there very soon. This is the 15 minutes time frame. This time frame is smaller compared to the 4 hours time frame. You understand? Now, how does time frame work? Let me give you a glimpse. Every candlestick you see here represents 15 minutes of what the market did. You understand? Like this particular red candle is telling us that within 15 minutes, the sellers were here aggressively. So that's just it. Now, if you go down to the 4 hours time frame, let's go there. You will see that we still have the same chart, but this time every candlestick is actually telling you about the market, what happened 4 hours. 4 hours. The 15 minutes tells you what happened within the range of 15 minutes per candle, and this guy is telling you what happened within the range of 4 hours per candle. So this particular candle here took 4 hours to form. Guys, can you hear me? If you can hear me, just type yes. If you can hear me, type yes. Okay. So this particular candle took 4 hours to form. Same with this one, same with this one, same with all the candles you see here. Now, if you go down to the daily time frame, the same thing you have there. You still have this same candlestick, but this time they are all telling you about what happened in a day. So I want you guys to know that. And another thing you need to know about forex is that, or about market structure, is that the higher the time frame, the higher the strength of the market structure. It's something you must know. The higher the time frame, what I'm trying to say is that this 4 hours time frame is much more stronger than the 15 minutes time frame. But that doesn't mean the 15-minute time frame is less. No, it's also important, but the 4 hour time frame is much more stronger. If you can hear me, just say yes. I can hear you. You can hear me, say yes, you can hear me. Okay. All right, let's move on. So now the 15 minutes time frame compared to the 4 hours are not equal. The 4 hour time frame is much stronger. Yes, you cannot compare this guy, what you see here, to what you see in the 15 minutes. You understand? That's where top down analysis comes in. We'll get there very soon. So now let's go back to 15 minutes so we can. So let's see something. Where is our drawing? Okay, so So all right. Oh shit. Back to what we're doing now. In your higher time frame, most times you guys already know the higher time frame, the lower time frame. Okay, let me explain something about the higher time frame and the lower time frame again quickly. You see all these things you see here, they are the time frames. These are the time frames. This one is 6 months. Yes, most times I come here to check some certain things. I don't analyze the market there. You don't want to do that. But for overall view, I visit those time frames very much. So this is the 6 months. So every candlestick here represents 6 months. You understand? So it took a whole 6 months for one candle to form in that time frame. This is the monthly time frame, the same thing. So it means we have 6 of this one to make up one of this one. Then this is the weekly, this is the daily, this is the 4 hours, 2 hours, 1 hour, 30 minutes, 15 minutes, 5 minutes, 3 minutes, blah blah blah. Now, in your higher time frame, you want to look out for the external market structures. You understand? In your higher time frame, this is what you want to focus on. Now, don't get me wrong. When I say higher time frame, you just go to 4 hours and you are looking for this. No. If you are, there are different types of traders. Let's quickly talk about that. There are different types of traders. There are some traders we call position traders. These are traders that can hold one trade, just one trade. They can hold it for months. Yes, you hear somebody will tell you, I only trade once a year. But he's a billionaire because he's not trading, he's not scalping, he's just he can just be on one trade for 6 months, one particular trade. So now the other ones we call swing traders. These guys can be on one particular trade for 2 weeks, 1 week. Sometimes I do that one too. Then we also have what we call the intraday. We have the day traders. These are guys that they can't stay on the chart, or rather they can't stay on the trade that exceed a day. Like they cannot be on one trade for 2 days, 3 days. They start their trade that day and close that same trade that day. So that's day traders. Then we also have scalpers. Scalpers, these are the guys that they don't have time. Yes, they can just do a quick trade, like 30 minutes they are out, either with their loss or with their profit. Just 30 minutes. 30 minutes is, yes, 30 minutes, let's say 30 minutes. So these are scalpers. Now, to decide who you want to be is up to you, it's not up to me. But after you learn, you will find yourself by yourself. So now, for any of this category you fall into, there's a time frame that best suits you. But we are not going to talk about that on this class. We are going to be talking about the internal market structure. Now, let's say we have the weekly market structure. Let's go to the weekly market structure. This is the weekly market structure. Now, if you take a close look on this chart, you discover that from this point the market heads to this point. That's the market is bullish, right? Yes, if you can like you to say yes, I would like your response. It will be very, very important if you respond. Can you guys hear me? You guys hear me? Okay. I'll come again. So what I said is there's something called time frame. We have multiple time frames in trading. This 6 months, 1 month, 1 week, daily, 4 hours. Now all these candlesticks you see here, this is the weekly time frame. So each of these candlesticks represents 1 week. It took 1 week, one whole week. Yes, yes, that's kind of true. I've been trying to fix it, but don't know how to do it. So what happen next time? So now back to what we are saying. Every candlestick here took 1 week to form. So this particular time frame is called the weekly time frame. Now this weekly time frame is stronger than the 4 hours time frame. It's very, very stronger than the 4 hours time frame. So what do you have here? You have the market trading upwards from this particular point to this point. Okay, let's count something. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay. For the past 15 weeks, I think that should be around 12, 3 months and some weeks. The market has been bullish. You understand? From year to year, it's telling me about 3 months and 3 weeks. The market has been bullish. Now the market started trending down, coming down from here. So from year now to year, the market has been bullish for some months now. So let's see the 4 hours. Let's see the 4 hours. Now what do you have here? Let's read market structure. We are talking about internal external market structure. So let's read it. Let's read this particular one. What do you have here? You have the chart trending up from here, right? Creating this break of structure, another break of structure here, this particular one. Then what happened? You have this particular move to this downside, came back here, created a failure swing, and what happened? Came down, blah blah blah. Now, if you want to mark out the external market structure on this chart, this is the external market structure. Market came down here. Can you guys see it? And it came here, retraced. Okay. Then from here, this one will not count as a trend. Like I won't add it to it because it failed to close above this guy. So I will just put it like here. So from here it came down to this point again, and it came up to this point, down to this point, and here, and I believe from here the market is going down. So let's leave it like this. So now if you see, this is the external market structure I just mapped out. I know it's rough, but hope you guys are understanding the point. This is the external market structure I just mapped out. From here the market came here, retraced, do this, retraced, do this, retraced, this, retraced, this, and what happened? Coming down here, and boom, and I believe it's coming down from here. So this is the external market structure. So now let's go down to the 15 minutes time frame so you guys can see something. Now if you see this 15 minutes time frame, let's use this region here. See this 15 minutes time frame. This particular straight move we had in the 4 hours. Can you see it here? It's creating its own market structure inside. You understand? So it's creating its own market structure. Higher highs and higher low, came down to sweep liquidity. Then what happened? Up here and doing whatever it's doing here again. So this one is called an internal market structure. Internal market structures, they happen inside the external market structure. So you already have the main trend of the market, where the market is going, and you're not seeing other things like this inside. That's what we call internal market structure. Now the external is actually the direction of the market. This is the 4 hours, for example, like that 4 hours we saw, and this is the 15 minutes. Now if you see, the 15 minutes is creating its own inside the 4 hours. It's creating its own. So it's called external market structure. Sorry, internal market structure. Then the 4 hours has the external market structure. Do you understand? Do you guys understand? I'm waiting for your response. Do you guys understand? Okay, one. Okay, you don't understand. I'll come again. I'll come again. Okay. Alright. If you don't understand, let me explain again. Yes, external on higher time frame, internal on lower time frame. Thank you. I love that. So now the and remember, I told you that higher time frame doesn't just mean 4 hours, external in 4 hours, internal in 5 minutes, 15 minutes. Now, if you see this particular move can be the 15 minutes, then this one will be the 1 minute. You understand? 15 minutes is a lower time frame, but compared to the 1 minute, it's an higher time frame. So the same thing, you can see this in the monthly chart and you can see this in the monthly chart, see this in the 4 hours. What it just simply means that external moves are moves that it is the lower time frame that creates external market structure inside the higher time frame, the main market direction. You understand? So that's it. So internal market structure are just they play along with the external market structure. The main thing here is, as a trader, which one do you focus on? Do you focus on the internal market structure or the external market structure? Which one do you focus on? What are you supposed to pay attention to as a trader? What are you supposed to pay attention to? Now, you see the internal market structure, they have their own importance in the market. Yes, they have their own importance in the market. Now, this external market structure is actually the main move of the market, is how the market is moving. Yes. So right here, you don't want to focus on this. Let me zoom it. You don't want to focus on this one. I'll call this a change of character. A change of character. Because, I told you guys, I said, like what we have here. Okay, like what we have here. We have the price from here. Market structure shift happening here to the downside. Now, that's the same thing you have here. From here, and the market came up here, and what happened? It broke this market structure and what came down. Now, you don't want to focus on that. This is the main move. So this market structure would have been a valid breakdown if this guy broke below this particular one here. Do you understand? So the one he broke below is called internal market structure. The one he broke below is called an internal market structure. Then what happened? The market went straight to this point, creating a break of structure, the main break of structure to the upper side. Can you guys hear me? Do you understand? Dr. Irene, do you understand now? Okay, excuse me, guys. All right. So back to business. Now, this other one here did the same thing. The market from this point dropped down to this point. What happened? Had a little reversal, came down, came here. Some people will say, this is a valid change of character now. This is a valid change of character. But what happened? Boom. Broke everything to the upside and did the same thing. So all these internal move, all these particular small one you are seeing here, they are called internal market structure. This is the market structure you want to focus on. But you don't see the market doing this. You don't see the market moving like, no, you don't see the market moving like this. It's very rare for market to move like this. It's very rare. So you will likely see the market doing this than this. So as a trader, you want to now focus on the main move of this one you are seeing, this particular one you are seeing. The main ones, you want to pick them out. So you want to, let me use the word, in your mind, you want to create this kind of structure out of this. You understand? That's let me just put it like that, bro. So you want to create this kind of structure we have downward here out of this one. So to do that, you just mark the recent high and low. Let me give an illustration. When you have markets doing something like this from year to year, so, and what you see a breakdown. Now, this particular point here, this is the low, the most recent low of the market, and this point here is the high, right? So if the market does something like this, came up here and did this, came up here, did this thing you are seeing here, some people will say, okay, the market has changed direction, because why? The market is below this one here. You understand? So they'll tell you the market has changed direction, it's below this guy. So this is a break of structure, a change of character. But what happened? It's not below this particular guy. This is the main one. You understand? If you can understand, you'll say yes. This is the main one, the main market structure, the main point you want to see price breaking below before you can say, okay, we have a change of character. You understand? But some people will see this and they'll like maybe put their trap here, expecting market to come here and go down. Then the market does something like this, but hitting their stop loss. Do you understand? Correct. So this is not, this place is not the main particular place you should focus on. So everything that happens within this high, this low, and this high is considered internal market structure. Everything that is happening inside this high and this low is considered internal market structure. Now that's what we have here. This is the low, this is the high. See the market doing whatever, but everything is happening inside this range. And boom, it broke to the upside. The same thing, leaving here as the new low and the new high. Everything happening inside is called internal. Then it broke again to the upside, leaving this place as the new high, the new low, and this place as the new high. Everything happening inside is also known as the internal. No matter how it's happening, until you have a break out either to this up or to this down, there's no change of character. So what happened? We had a break of structure to the up. It came down here again, created those internal market structure again, but this time it broke below this point. This is why no, this is not a break of structure. This is a market structure shift or a change of character. Now this is where we now have the change of character. Then what happened? Boom, down to this point, created the same thing, but this time broke below this low. So every other thing you are seeing, this particular point here, these ones are internal market structure. Look at the main high here and the main low here. So this one, no. Even if this guy come here like this, it's still not yet a valid one. Still not yet a valid one. It's still not yet a valid one. You know why? Because this is the high you want to see price break. Is that understood? Is that understood? Okay, now let's do some practical of this on the real chart, but I don't want to use this chart, it's kind of rough. So let's see if we can use it. Okay. All right. Okay. Now let's go down to the 4 hours. I want you guys to see it properly. I want you guys to see this properly. Now, this is the 4 hours time frame. It's an higher time frame compared to the 15 minutes. So remember what Iliomet told us: external market structure are on higher time frame. Internal market structure happens in the lower time frame. So let's do something now. Let's use this particular chart. Just looking at this now, from this point to this point, you know the market is bullish, right? Because from year to year it was heading upward. Or let's start from the daily time frame. Let's start from the daily. Now see what we have here in the daily time frame. Pay attention. From this particular point, market came here, did this, and what happened? Let's say here is our change of character. Let's say this is our change of character. You already know it's change of character. I don't want to write it. Then this particular place is a break of structure. Now this is the external move. Oh, don't forget. Break of structure. Then what happened? From here, the market came up here. Did they add a retracement to this point? To this point, they retraced down to this point. So let's see. I will leave an assignment from here. So we had a break of structure here. Yeah? We had a break of structure here. Okay, let's zoom in. So we had this break of structure here. Let's zoom in. I want you guys to see something. You see where we have our break of structure. So after this break of structure, what happened? Price came down again to this point, creating another break of structure here. Creating another one here. So after this one, what happened? Price came down to this point. Note, this is our most recent low after that break of structure. And here, so let me use this too. Here's our recent high after the break of structure. Do you understand? So now, this is a valid change of character here. Because why? You see, the market broke. This is the change of character we had, the break of structure, the last break of structure we had, pulled it down, and the market came up here. This retracement failed to break below this point. So this move failed to break above this point. So everything will be classified internal. You understand? To be classified internal. So as you classify internal, what do you see? This guy broke below this one. That's it. Now, but that's not just what I want to show you guys. I want to show you guys the main internal market structure that you will see. So here we have this change of character, break of structure, break of structure, break of structure. But this is the daily. This is the daily time frame. Let's go down to the 1 hour. All right. This is the 1 hour time frame. Do you see that inside inside this particular break of structure for the daily, you see you have a downtrend here. This is a downtrend, a full downtrend. Now this particular downtrend is called an internal market structure. It's called an internal market structure. So let me zoom. You see along from here what happened? The price came here, failed to break above this point. Then we had a change of character here. Then to this point came. From here we had a change of character here, from here to here. Huh? Then after the change of character, price came downwards. We had another break of structure. That was a break of structure. We had another break of structure from here to here. Then we had another break of structure from here to here. And we had this move to the upside, blah blah, change of character, and it started heading up. So you can see that inside the daily break of structure, we have a full-time downtrend and uptrend in the 1 hour. So this particular move is called internal market structure compared to this one. Compared to this daily time frame move we had here. So now that move trade you saw in the 1 hour time frame. Look at the trend, look at it here. So here we have it as impulsive retracement. After this one we came here, broke structure. But on your lower time frame you had a very big trend, right? Yes. If you understand, say yes. If you understand, say yes. Okay. You understand? Okay. Now, so that's it. Yes, that's it. So this break of structure, you just see like break of structure here, but it's actually a trend on the lower time frame. So those trends are what we call internal market structure. So internal market structure can be this particular one here. You see this move here, everything you see here it can be an internal market structure to the monthly time frame. You understand? To the monthly time frame. So this move like this, in fact, is one move in the monthly time frame. But here you have break of structures. So that's it. Now, I think we should end it here. I'm not feeling too okay. I'm not feeling too okay right now. So in our next class, I will talk about the main importance of this internal market structure using SMC strategies. So, but before I leave us tonight, I want to give us an assignment. And that assignment is very simple. On your own, that assignment, you will drop it on my DM, my personal DM here on Telegram, before our next class on Thursday. Now you can do research. You can do research. Go ahead, do your research. Now I want you guys to go to your chart. Then on your chart, look for the 3 types of market structure we have: the uptrend, the downtrend, and the ranging market structure. Mark it out. So Queen, I really don't understand what you're saying. I really don't understand what you're saying. So as I was saying, so go to your chart, map out the 3 type of market structure we have. I told you guys, I said on the ranging market, the market does what we call support and resistance. The market is trading in a support and resistance level. Okay. Then you send me your message, your own on WhatsApp. I'll drop my WhatsApp number after this class. I'll drop it on this group. So now, if you see this particular point, this is a ranging market here. You understand? Let me mark it. Sometimes ranging market doesn't just look as sweet as you will see the drawing. This is a ranging market here. Yeah. You understand? So remember, this is a daily time frame. So this thing will be, this is not 2 days. This is not even 1 month. This particular region here is up to maybe 3, 4, 5 months. No, I'm not sure it's up to 5 months, but maybe. So this is a big move, and it's what, a ranging market, because the market is not actually giving you a clear trade. It's just trading sideways. Before we had this we had this pull out to the upside, and what happened? This particular thing, we'll talk about it. All these things, we'll talk about it as we move on. Like this one now, the market came down here before it started going upward. We have breakout here. That's the word, breakout. This is the range, the breakout, the retracement, and what happened? It gave us the uptrend direction. So now you will mark it out. This particular place here where the market, this top side is called the resistance. What does the resistance do? It reject it reject God. It rejects the price to the downside from the top. Then the downside is known as support. It rejects price to the upside. So you have this particular move, and what do you have here? This place you had a rejection here. The market came down. Although this one broke, but that one we'll talk about it in other classes. Then came down, retested this level again, came up, had a rejection, then what, came out again a little, then boom, did this, and now we are heading upward. So that's it. So this is a range market. This is a bullish market known as a trendy market. This one is a downtrend. So you go on your own, map out the market structure, the 3 types of market structure. Then for your uptrend and your downtrend, mark out your internal market structure. Is that clear? Can we do it? Response please. Can we do it? Can we map out our internal market structure from? Can we do it? Okay. Doctor. All right. Okay, so that's it. Now this assignment you have to submit it on before Thursday. Before our next class. You have to submit your assignment before our next class. So that's basically it. Any question? Yes, I gave you guys assignment before. Yes, that's true. What was the assignment about? Okay, I told you guys to look for market structure, like uptrend and downtrend, my highs and your higher lows, your breakout structure. And you're the only person who submitted that assignment to me, and you did well. So now I'm giving us the assignment again. This is like full stack assignment. Do the breakout structure, then look for the internal market structure. Just check out for the internal market structure, snap it and send it to me. Oh yeah, I'll do that. So since we don't have any questions, I think we should round up. I think we should close this section of this meeting here now. Alright guys. I'm not feeling too strong. So that's why I just want us to close now. So we'll see you guys in the next class. Alright guys. I love thank you, thank you. You're welcome, you're welcome. I love you all. Good night. Okay.